It's Australia's heaviest one-day toll. 25 Victorian lives snatched by the invisible killer.
Is under strain tonight as the coronavirus pandemic eats away at our way of life.
Impacting the demand for copper, iron ore, even gold is going down.
The government has spent $164 billion so far.
If I can start with the daily update, 1,494 cases of coronavirus.
We can keep the virus at bay. Australia is superbly positioned to bounce back.
COVID-19 has impacted our world drastically. Most things have been impacted, such as how we live and interact with each other, but as well as how we communicate and work. Throughout this crisis, COVID-19 has had a huge impact on many jobs, including manufacturing imports that are received from China. But as well as that, the Australian stock market, which is described as one of the world's leading financial markets, was also impacted by the pandemic, falling almost 40% as of March 23rd. Many financial investors state the reason for the fall was because traders have panicked, sold out of fear. Quoted by Travis Hartman, the Australian stock market has responded to this with unpredictability with large drops, which is commonly found throughout this crisis with many major stock companies. An example of this can be shown with Wesfarmers. Since Thursday the 20th of February up until February the 28th, it had dropped 15%. It continues to drop another 25% as of March 23rd. As time passed, you notice unpredictability with stocks rising and falling over the course of 3 months. This is where finally on the 3rd of June, it had risen by 0.34% and continues to rise as of today. Let's suppose you've been given $50,000 and your aim is to pick out a range of stocks and record the gains over a course of 5 trading days. But before we start choosing in our investments, we begin on Sunday the 16th of August. Well, after doing a range of researching and analysing, I've come up to the conclusion of the 3 main stocks I would pick to hopefully make a profit by the end of the week. They are Afterpay and the Commonwealth Bank of Australia. Let's first start with why I picked the Commonwealth Bank of Australia. Well, this is actually another prime example of its shares showing unpredictability since the beginning of coronavirus. Short for CBA, Commonwealth Bank is a good share to invest in for the long run, I believe. I say this because not only are their shares cheap, but they also pay a high dividend, which over the course of 20 years, if you were to pay $70 for a stock, you will be able to make your money back on top of how much they're worth. And by looking at the statistics 10 years ago, Commonwealth Bank has almost doubled since then as of February 2nd, 2015. Although these shares wouldn't grow a lot over the course of 5 days, it's still a good investment for the future. Another reason why I chose Commonwealth Bank is because it's considered a blue chip share, which is described as a shares of leading company that is considered to be a strong name in the industry, quoted from CommSec. Lastly, Afterpay. Afterpay is a system that allows you to buy now, pay later in full installments interest-free. Afterpay's share price has rocketed just over 94% since the beginning of the year to become one of the top ASX shares. The reason I picked Afterpay is simply how popular it is now in the pandemic. Many people have turned to online shopping as retail shops have been forced to close. Afterpay has around the same price range as Commonwealth Bank's share price. It's said to be more likely to increase due to how fast it was able to bounce back after falling from a 52-week low of $8. Instead of dividing the money in half, I've decided to go for a bit of a risk. Because I'm nearly 100% certain on my blue chip CommBank shares, I've decided to invest only $10,000, which is 1/5 of my original allowance to it. Due to how fast Afterpay has risen by, I'm hoping it will continue to rise, therefore I will be investing the remaining amount. If I invest $10,000 in the CommBank shares, I will be getting 141 shares in return. If I invest $40,000 in the Afterpay shares, I will be getting 542 shares. So after 5 trading days, we finished on the 21st of August. Commonwealth Bank just fell short of 1%, while Afterpay's share price was $78 a share, growing to $5.17. If we add up our losses for CBA, our $10,000 had dropped to $9,817, while Afterpay made a $2,790 in profit over the course of the 5 trading days. Here's a graph that shows the before and after of the 2 shares I picked. As shown, very little has changed with CommBank shares, while Afterpay shares have risen by more. By investing in these companies, I stand at an ethical standpoint, meaning that these companies don't pollute/harm the environment. By concluding my investigation, I can state that some companies grow much faster than others. Smaller companies are more likely to have more drops and rises due to unpredictability, why blue chip companies tend to stay at the same rate but slowly changes after time. Thank you for watching my great moments in isolation video. I hope you all enjoyed.